Hi, folks. Adam Smith here with another Monday Measure. Opportunity for me to share information about the coming economic week, some things to pay attention to or to look out for, my observations, and hopefully some things that will be insightful. This week, we've got the Federal Reserve starting their two-day meeting on Wednesday. That'll be interesting because we'll get to find out how much the Federal Reserve is going to increase interest rates. I think they'll probably increase interest rates by a full percentage point. I'd actually like to see them increase more than that to combat some of the inflation. I'm not sure that'll happen. One whole percentage point would be a strong move for the Fed. I think the market's anticipating this as well. We've seen the 1-year Treasury up over 4% now, and that 10-year benchmark rate is right at 3.5%. So the bond market continues to sell off. Interest rates continue to rise. Again, I think in anticipation of what the Fed's going to do this week. Also on Wednesday, we're going to get existing home sales, and we'll also get information about mortgages and mortgage applications. I think the mortgage numbers are going to be down. We've already seen mortgage applications plummet. I think that existing home sales could actually be up a little bit as potentially people are exiting the market here at the end of the summer in anticipation of higher rates here in the fall. But as many of you know, I think this is the next shoe to drop. So it'll be really interesting to see what those numbers look like. I think the a contraction in the housing market is in the works. Finally, I want to talk to you a little bit about inflation. You know, watched the President of the United States speak on 60 Minutes recently, and I've heard others talk about how, inflation has moderated. It's flattened out quite a bit. The latest data reading really wasn't that significant. We're not seeing things go up very much. Inflation is what we would call a rate of change. And it's important for us to remember that. It's important for all of you to think about it that way. Think of it this way. If your house was on fire and it was being destroyed at a rate of 8%, and the fireman came up to you and said, "Good news, your house it's only being destroyed at a rate of 8% still." Would that make you feel any better? Would you feel like the fire's being put out? I don't think so. And that's really where we are with inflation. The fact that the numbers haven't continued to spike or not continued to accelerate doesn't mean that the fire's not still raging. Your wealth, the value of a dollar, continues to degrade, to be devalued, and so that's where the problem is. We need to see the inflation rate come back down again. The fact that it's still over 8% is really significant and really a bad sign for the coming economy. If you want to take some steps to protect your financial house from this raging fire, if you want to do some things to protect your wealth, talk about action you can take right now, please click on the link below to schedule time to have a conversation with me, and we can discuss how to take control of your financial life and make sure that you're protected from all that's happening. I hope you have a wonderful week. I hope I get to talk to each and every one of you. Thanks.